Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries behind the money. Today we're diving into Semtech Corporation's latest filings, and let's just say they're making some big moves with their debt. Get ready because Semtech just issued a truckload of convertible notes, and it is not exactly a simple debt deal. They're raising a substantial amount of money, and it has got layers of complexity that we're going to unpack. So, what is the big news, Semtech? A company that designs and manufactures advanced semiconductor solutions and provider of mixed, signal and enabling semiconductors, is essentially borrowing money, but in a way that could turn into stock later on. They V-priced an offering of $350 million in what they call 0% convertible senior notes due 2030. Now, that sounds a bit strange right off the bat, right? 0% interest. How does that work? Well, it means they aren't paying regular interest. But there is a catch, and we'll get to that. This deal involves an indenture, which is basically a fancy contract between Semtech and a trustee, US, Bank Trust Company, National Association. This indenture lays out all the rules for these notes, including what happens if things go wrong. Think of it as the rule book for this massive borrowing. And get this, the initial offering was for $350 million, but the people who bought these notes, called initial purchasers, had the option to buy even more. And guess what? They bought the whole extra chunk, bringing the total amount of money Semtech raised from these notes to a whopping $402.5 million. That is a serious amount of funding. These notes are due in 2030, so they have a good chunk of time before they have to be fully paid back. But here is the really interesting part about convertible notes. They can be converted into the company S stock. Holders of these notes can choose to convert them into Semtech's common stock under specific conditions. One condition is if the company's stock price stays high for a certain period. Another condition kicks in if the note's price drops significantly compared to the stock price. They can also convert if Semtech decides to buy back the notes. Right now, for every $1,000 of these notes, you could get about 9.9 shares of Semtech stock. This means the initial price they're revaluing their stock at for this conversion is about $101.05 per S-share. This is quite a bit higher, about 42.50% higher than their stock price on the day they priced this offering, which was around $70.91. This shows they believe their stock has a good chance of going up. Semtech can just decide to buy back these notes whenever they want. They have to wait until October of 2028 to even consider redeeming them. And even then, there are strict conditions. They can only redeem them early if their stock price has been performing really well, specifically if it has been at least 130% of the conversion price for a good stretch of time. This protects the note holders from unfair buybacks. Now, what happens if something big, like a fundamental change as they call it, happens to the company before the notes are due? Well, note holders have the right to demand their money back. This is a crucial protection for investors. Let's talk about how this debt stacks up against other debts. These new notes are senior unsecured debt. This means they are not backed by any specific company assets. They are equal in priority to some of their older convertible notes, but rank below any debt that is actually secured by company assets. And importantly, they are structurally junior to any debt held by Semtech's subsidiaries who haven't co-signed these new notes. This can be risky if those subsidiaries face trouble. This indenture also lists out what they call events of default. If any of these happen, the note holders can demand their money back much sooner. This includes not paying back special interest if it is due, failing to convert the notes when required, or if the company goes bankrupt. There is also a clause about defaults on other debts exceeding $75 million, which is a pretty low threshold for a company of this size. And of course, if the company or a major part of it files for bankruptcy or is reorganized, the notes instantly become due and payable. So, Semtech raised $402.5 million initially, but after fees and expenses, they netted about $391.2 million. What are they doing with all this cash? A big chunk of this money, over $220 million, plus some stock, is being used to buy back their older convertible notes that were due in 2027. Another $63 million plus more stock is going towards buying back their 2028 notes. They're essentially refinancing some of their older debt with this new, potentially less expensive debt. They're also using about $56 million to pay down existing term loans. It seems like they're cleaning up their balance sheet, but it is costing them some stock in the process. Now, to further manage the potential dilution from all these stock issuances, Semtech has also entered into what are called capped call transactions. Think of these as a kind of insurance policy. They've worked with several banks, and these transactions are designed to help offset the dilution if a lot of these notes get converted into stock. These capped call transactions have a cap price of about $141.82 per S-share. This is a significant premium, 100% higher than their stock price back in October. If Semtech S stock price shoots past this cap price, the benefit of these capped calls starts to diminish, meaning more dilution for existing shareholders. A key point here is that these notes and the shares issued in exchange for older notes were not registered with the Securities and Exchange Commission. They were sold under exemptions that allow for sales to qualified institutional buyers and accredited investors. This is common for large debt and equity deals, but means that the general public didn't have direct access to buy them initially. And just to tie it all up, they finalized this big deal through a purchase agreement with UBS Securities LLC and Morgan Stanley and Company LLC, who acted as the initial purchasers. They also released a press release on the 8th of October 2025 announcing the pricing of this offering. So what is the story here? Semtech is aggressively managing its debt structure. They essentially swapping out older, potentially more expensive debt for newer convertible notes. They reusing a significant amount of cash and issuing stock to make these exchanges happen. The goal is likely to reduce interest costs and extend their debt maturity. However, the issuance of stock to facilitate these exchanges and the potential for future dilution if the notes are converted are significant considerations for current shareholders. The capped call transactions are a good attempt to mitigate that dilution, but they aren't a perfect solution if the stock price really soars. Looking at this, Semtech seems to be in a phase of financial recalibration. They retaking on new debt to manage old debt and perhaps fuel future growth. The success of this strategy will hinge on whether their stock price continues to appreciate significantly, making the conversion of these notes more attractive to holders and justifying the stock issuance for Semtech in the long run. The risk is that if their stock doesn't perform as well as they hope, they'll have to pay back a large amount of cash on these notes without the benefit of conversion to offset the dilution. Investors need to watch their future stock performance and their ability to hit those key performance indicators. Alright, that is our breakdown of Semtech Corporation, S latest filing. What is your take on these financial maneuvers and what they signal for the company? S Future, drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.